Good morning, and hope you're all doing well. Really short, quick update today, and a few things to think about. So, very quickly, I'd like to put a chart up of the S&P 500. Been lots of action recently. Um, I don't think we can call this a tech wreck, but we can definitely call it a correction. A lot of the big companies are, between 5, 6, 7, up to 20% plus off their peaks, and a lot of volatility around in the marketplace. One news item that really caught my attention was Warren Buffett selling off 50% of his holding in Apple and going for treasuries as an alternative. Now, um, why would you do that if you have immense confidence in general in Apple based on returns and risk? Why would you do that? And answer is I don't know, but to me it's a signal. To the whole market, it's got to be a signal. Anyway, moving on from that, I'd like to quickly cover some of the salient features from Vulcan Energy's most recent quarterly. And I don't think any big surprises, but just to highlight some of the factors that we have done before. The testing from the lithium extraction optimization plant is going according to expectations in terms of efficiency, extraction, etc. That will be converted to battery-grade lithium hydroxide monohydrate at Vulcan's downstream CLEOP, so Central Lithium Electrolysis Optimization plant, which is currently under construction, and that will be another milestone for us to look out for, another catalyst when that's inaugurated, etc. Then in the same site, they will eventually develop the phase 1 central lithium plant. But so far so good, and I think that's the salient features from what they've achieved in the quarterly. But the bigger news, or what I'm looking out for further, is on the financing and some good updates on that. Again, nothing sort of unexpected. They launched their final phase of project level financing, and they're also in discussions, as well as tier 1 financing partners, also in discussions with future equity partners as well. So the whole financing package discussions, etc., is on track. And again, that is another expected catalyst and great milestone when we get an update on the next level progress on that. So with Vulcan Energy Resources, it's just about sitting tight and looking forward to those milestones being completed. And there have been other bits of good news, but those are the key ones we're waiting for. Now, in general, how will the lithium market play out? I mean, we're continuing to see weak spot prices. There's news about dampening EV demand, stockpile. China's economy is not recovering as quickly as expected. EV incentives dropping off in Europe, etc. How is this going to play out? And I think at times like this, especially when you're going through a complete cycle for the first time, the best one can do is revert back to the basics of economics and the basics of commodity markets. So there are, in general, for pretty much all commodities, there are cycles, there are ups, there are downs, and normally we overshoot on the way up and undershoot on the way down. That's pretty much been a pattern, I think, in general. And some telltale signs. Obviously, we've seen the prices continue soft prices, but we're seeing, I would say, delayed progress on a number of developments, or even those at the exploration stage, which were much more bullish. Let's take, one I used to follow, Lake Resources. News from Albemarle that they're switching part of their Kemerton lithium plant off and not going for further expansions for now. There are delays in bringing on new developments by Rio Tinto and Lithium in Serbia, as you may have heard. So, when they say low prices are the antidote to low prices, and these are the kind of changes that we see happening in the marketplace already. Now, here's something that I got from an Ernst & Young report. I will read it out verbatim. I think it encapsulates everything. So, in the US, high interest rates, inadequate charging infrastructure, and uncertain economic conditions have fueled affordability and range concerns, resulting in a slowdown in EV sales. Although this is expected to plateau in the near term, Europe is being impacted by high prices, economic uncertainty, and inadequate infrastructure, slowing electric vehicle adoption. While other parts of the world are experiencing an EV slowdown, China remains on course for growth, with battery electric vehicles set to make up more than 50% of sales by 2030, 2 years faster than previously suggested by forecasts. Despite the current EV sales slowdown in the US and Europe, long-term forecasts remain unchanged, with an expectation of BEVs making up 50% of sales by 2030 in Europe and 2033 in the US. So I think that really encapsulates short-term, long-term perspectives. In other words, if you're a long-term investor, from my perspective, it's about having confidence in that long-term investment thesis, in the company, and in the supply-demand dynamics. Here's a really interesting chart. I just throw this up because it has parallels to what I said earlier about the S&P 500, but also the EV market. And longer term, when you're investing in the right companies, essentially, no matter what has happened, the return over the long term has been pretty consistent. So in general, if one believes in the tech, automotive, and electrification thesis, and the imperative to reduce greenhouse gas emissions and in particular pollution, and go for a more advanced, efficient future, then I would say that EVs and lithium long term should have a similar chart to this. And my last chart again addresses some of the topics that I covered earlier regarding why EV sales are plateauing in the US and Europe. And one of the issues that I mentioned was price. Now, just look at the price of this EV from Geely, which is targeted at the global market. Now, this is what effectively Europe and US are waiting to do and achieve: a better infrastructure, more choice, and to knock out lower cost EVs like this. But when they're at this price in general and they penetrate all markets around the world, I mean, you're beating ICE with something like this in terms of quality and cost and capex and opex. I think the future, long-term future, remains as expected. So I'm holding on. I mean, I wish we could see bigger price movements in the investments that we hold. Absolutely, but you can't control that. In general, more charging infrastructure and pushing out vehicles at this sort of cost, it's solving problems that consumers have: affordability, higher tech vehicles, infotainment, and more synergy with your other applications and devices, pollution, health, it ticks all the boxes. So I look forward to a continued rebalancing in supply and demand with price doing its thing. And from my, I've been saying this a while, but I'll say it again. My expectation, it's not advice by the way, is that a recovery on the lithium side will start mid 2025. Will start mid 2025 because I think it takes that long for supply, demand, price dynamics to settle. And then I would expect demand to increase in other markets as well from mid 2025 and then really going into 2026, 2027, where we start to move up the S curve. Let's see what happens. Take care.